Welcome to Ops or Die, the podcast for people that know ops isn't sexy until it saves your ass.
Lovely to have you, Christopher, and so pleased to have you talking about fundraising and the things that startups don't necessarily think about, and some of the mistakes they make, and growing successful companies as a serial founder. But why don't you just give us some background on yourself, just to start with?
So Christopher Hussain, and I've had a couple exits behind me. Prior to that, I was actually in the mortgage and real estate space. What made my name was actually being the number one mortgage originator in the US for 2 consecutive years. And what that means is that I did more loans than anybody else as an individual. I'm also the only person ever licensed in all 50 states as an individual, which was an accomplishment. And also, when I was at my prime, working with about 450 different banks, lenders, and credit unions that I could broker a bank to for my clients, which gave me the reputation that if I could not do a loan, nobody could do it, since I had all 50 states and I had all these lenders, banks, and credit unions that allowed me to do loans that other people didn't have access to. And just to give you an idea, most people work with 10 to 20 of them. This led to me then during the last housing crisis, when I was the national sales director for the largest brokerage in the US, First National Mortgage Sources. I ended up selling that office to a startup. So my first startup was actually in the repossession space, a company called M. Davis Company. There I came in as the essentially interim head of product and CTO for them. I came up with a concept to put cameras on tow trucks that we contracted with that would then use optical character recognition to recognize the plates, so you didn't have to do skip tracing, collections, all this other stuff, and avoided also the towing guys not breaking into people's garages and potentially getting shot at, which actually did happen multiple times. So not something I'm too proud of, being in repo space, but that was my first foray as part of the founding team. That company got acquired by Primeritus. And then I went back to doing mortgages, and then got called in for my second to last company, Syndio, which was an online mortgage brokerage, similar to Better.com, if you've heard of them. So they came before them. That company got acquired by Freedom Financial, and I was the co-founder and COO of that company. And so kind of got my first, taste of pitching, presenting to investors, raising capital, and that led to RealKey, which was my last company. And with RealKey, so I was the CEO and founder of that company, and as a essentially automated mortgage processing and underwriting. It's the industry's first ever AI-powered deal room where you could essentially invite in all the different parties involved so they can meet requirements and conditions that the system automatically generated. And then as they would upload them, the doc AI would recognize it was uploaded quickly, faster than anything else out there, and then provide immediately either thumbs up or thumbs down. You triggered something new. And if you had questions, rather than chatting with chatbots, you could communicate with everybody in there, because it would literally invite in title and escrow, appraiser, inspector, employers, landlords, HOA, you name it. And so that company is in the middle of M&A talks. And since then, I've been doing advising consulting as a one-man accelerator with a pitch deck focus.
Great. So when we look at the fundraise process, I mean, what's the amount of money you've helped raise for these different companies? How long did it take you, and what were some of the key things that the experience helped you to improve, and what was that?
Yeah, absolutely. So I mean, I'm coming close to almost $500 million raised at this point. 280 million plus of it has been since we paused RealKey last year, and I've been doing advising consulting, and the rest of it has been through the other companies that I've worked with. Now, RealKey was definitely the most difficult, being that it was mortgage and real estate, and there was everything from COVID to rates going up and just being in that industry, and that was part of the reason we paused the company. Um, So it takes a varying amount of time. It depends if you're in a hot industry. Had we been fundraising maybe 2 years earlier during 2020 to 22, substantially easier, higher valuations. We definitely scratched that AI itch since we went through Google's AI ML cohort. So biggest company in the world, including is one of 12 that they chose that had to be at least 2 million ARR and above to join the only fintech company that would have made it a lot easier during that big AI boom. I think AI is kind of starting to taper off a bit, still hot. And I think that, mortgage, real estate, fintech being cyclical, we're probably about another year or two to seeing it really heat up again. And so those that can get in sooner are going to be, able to take advantage of the upswing. And those that want to wait and follow on, um, I think it's going to be hot in a few years.
And so, Christopher, when you're talking about these fundraising and you come from, you've held a COO position, the operations behind fundraising and investment is just another piece to that startup entrepreneur life. And so, with what you've done in the past, how do you see kind of the operational perspective of fundraising and investment and to keep that all going on top of, operating a company?
I mean, I think that's difficult at the end of the day. I actually one of the mentors for UC Davis Entrepreneurial Academy, and with them specifically, that tends to be a very engineer focused university. And so a lot of the founders that I'm speaking to come from the technical background. I mean, even if you look at Silicon Valley in general, well, you think fundraising here, but interestingly enough, the majority of the people in Silicon Valley are builders. They're not on the
Mhm.
business side. They're not on the marketing side, the strategy side, the product side. So you can, when you're doing fundraising, you have to keep in mind that that is a full-time job and a half. You have a lot of outreach, a lot of time is sucked into that, and a lot of energy. And if you're a builder and you're doing fundraising, you're not building.
Yeah.
If you're head of marketing, or sales, you're not selling. So it is a distraction, and that's something to keep in mind. And that's why a lot of investors want to see that you have more than one person that's founding a team. They don't want to see a single founder because the founder is usually one doing the fundraising. Somebody's got to do it, and so they want to see that you've got a real team that is splitting up and dividing and conquering. So yeah, I think that that's something that's difficult for people to manage is that you need to grow not just the product, but the sales and the marketing. Everything needs to keep showing traction. And the fundraising is a very big part of how you get to success. So it's balancing all of that.
Yeah, and I mean, from that as well, fundraising does take a lot of time, right? I seen statistics that it can literally take the team out 3 to 5 business days out of the company. And what you're saying there, it is so key to have other people to help manage and operate the company. Very hard to do if you're a pre-seed or seed stage company. How did you navigate the balance with that when you were in that stage and looking at fundraising?
Yeah, so I mean, I do advise for a lot of early stage companies. I'm working with accelerators and incubators specifically. And the incubators are earlier stage. That's where you get into pre-seed, true seed companies. And with them, I think that it's helpful that they're going through those incubators and accelerators. I would suggest that to any founders that are listening that really have never done this before and don't know what to do. Well, you get in with them. I think that that's something is you need that first investor, and you don't want it to be mom and dad. You don't want it to be a family friend. It needs to be somebody that everyone's going to actually trust to go through and to follow on. I'm not going to trust your high valuation from your parents. They're your parents. They're the
Mhm.
ones that give you the trophy when you don't deserve it. And so that's really, you need somebody who did proper diligence, that has seen companies, that knows valuations, that knows what should be in the deal room, that knows that you checked all the boxes at the end of the day, and that this is not amateur hour. A, that is part of why we hear that so many companies fail. It's not companies failing, it's founders that shouldn't be founders, it's startups that shouldn't be startups. It's teams that didn't take the right approach. And so that's where we get a lot of noise, and that's where investors have to get through all that noise. And a very helpful indicator is that you've got a great first investor that they could follow.
Smart. Yeah, I think that sorry, I laughed so hard at that. Just because Christopher, you see these friends and family rounds, and I think that is almost a misnomer at this point. One of my close friends likes to call it the friends and family office rounds. Um because that's more accurate as far as I think what you're saying right there is you need that trust position for your first investor, your first real investor. You know, if your parents are helping out paying for your life while you're doing a startup, that's one thing. That's not an investment. That's separate. But if you're going after investment. And so one of the things you mentioned there is the deal room or the data room that startups have for investors to see how they're doing. Um, how do you look at that data room and creation of that kind of deal room that investors can see and what needs to go in there? How do you advise your startups to approach that? How have you approached that in relation to investing?
I think that what's usually missing from a deal room most of the time is the finances. It's the most complicated piece, and it's something that a lot of builders are not really great at. I mean, they didn't, unless they are an accountant by nature or an accounting or financial person, they're not going to really be apt to know what should be in there. People can hack marketing, so to speak. They can hack this and hack that, but when it comes to finances, and that's really what a lot of investors look at. That's why most investors
Mhm.
throw you to an analyst. They want somebody to analyze you and analyze your data and see what they want to see there. And especially if they're a junior person, there needs to be what they expect to see there. They are not going to do the work for you and be able
Yeah.
to think, strategically about, okay, well, this company could do this and this company could do that, and they'll get there. They just want to see the numbers are there. All right, you're going to do marketing. Okay, well, how much is going to marketing? Where's the marketing going? Okay, great. How does that relate to top of the funnel? And how does that eventually relate to conversion? Okay, sales teams, okay, well, do you even have commissions in there? So many times they have the budget for the salesperson, but they don't even have the commission structure that's in there. And so these
Yeah.
are those gaps that I'm usually just things that I know are things that people typically miss. And so I'm looking for those initially, and I'm trying to tell a story at the end of the day. And that's really what your deal room needs to do is tell a story. I need to show that you got your act together and that you have a real plan. I give you money. Where's that money going? It's going to go to getting the company this ARR. Oh, yeah. Okay. How are you going to get there?
Yeah.
How are you going to use KPIs to drive this growth? Oh, the product's just going to get there. We build it and they will come. No, that's not reality. And that's not how anybody looks at this. And I don't know if you muted yourself and you're not laughing, you're laughing with your face, but not in your mouth. But yeah, that's the reality is that they think that you will build it and it will come. And that's
Yeah.
not reality. And they want investors to invest. And so often I hear, well, I don't want investors that don't believe in our products. Like, they'll believe in your product more when you have numbers on top of it. They're already talking to you. So they're talking
Yeah.
to you because they like the problem that you're solving and they like the problem you built. But that's not how you scale a business.
Yeah.
Yeah.
Yeah, I love that idea. And I just have to throw in there that I like the term to use the idea of startups are the dissolution of the field of dreams concept. If you build it, they won't come. They won't. You have to have a plan for that, and you have to. And I love what you said about story. That's so important. You have to tell a story. I'll get back to that with my next question, but I'll let Maria take over for a sec.
Yeah, I mean, it's I think one of my frustrations when I look at pitch decks as well and founders and also wear an investor hat. So apart from being a founder of ScaleSpark, is a lot of the time I will see the ask. So I want your view on this. So I'll see an ask as, oh, we want $2 million in funding, right? And then fluffy financials or not well thought to, it hasn't been built up from the ground. And it's like, okay, but I'm only going to hire engineers and I'm going to make $1.5 million revenue the next year. And so how do you guide customers around the ask? Because this is really where financials is coming in so strong in looking at that whole strategy. And that's one of the things we look at to see what that structured process is. So how do you guide them past their process, and how does that tie back into this narrative of the pitch deck versus just thumbs up numbers?
I mean, I do use the pitch deck is the foundational piece because I think at the end of the day, it's where you're consolidating everything that is up here for all of your team into one single place. And honestly, big advice that I always give is that the team, everybody, not just the leadership, once a month should look at that pitch deck, and the CEO should be pitching to the whole company to make sure you're getting heads nodding like, okay, yeah, that's what we're building, that's what we're going, that's what we're doing, and here's how we're going to get there. Because as soon as you start getting people like, wait, what were we doing? We're doing that. That's what you're telling. Who are you telling us to? Oh, crap, we're in trouble. You need that alignment. Um,
Yeah.
I think it's also getting the pitch down. And what I find so often, especially for the technical founders out there, is that I mean, we had this conversation before we started recording, was that you have a lot of individuals that have a hard time communicating what the company does or is doing and how they're going to get there in a short amount of time. And so often, I mean, I could tell you I've been doing pitches for so long, and all these pitch companies, you see companies pitch. Again, you should be able to do that 30-second, 1 minute, 3 minute pitch is a great exercise. Forget just doing it on stage and oh, you can't pitch a company in that much time and get everything across. You should be able to get a lot across in a short period of time. And how are you doing it? And are you doing it in a way that has so much industry lingo that nobody can follow you? Or are you dumbing it down for the everyday investor? Because let's be real, not every investor is from your industry. You have a lot of doctors that are investing in fintech. You have a lot of people in finance that are investing, in food companies and, manufacturing and everything else that they've never been in. They want to invest in those if you can go through and make it make sense for them. And I think that that's part of marketing is you should be able to do it for the everyday layman person because then it's much easier to then hone it in for that champion that you're actually selling it to that knows your industry in and out, knows exactly what you're doing, loves it, and is trying to sell it to the people at their company that have no idea what they're trying to pitch because they need a pitch for you.
Yeah.
So that's kind
Yeah.
of how I use the pitch deck at the end of the day. And I do see a lot of things missing. I can tell you one of the biggest things I always see missing is what's in it for me as an investor. Consistently, it's okay, here's my team, here's, the product and the problem we're solving, here's our go-to-market, here's, say, our business model and how we're going to get there. And the ask, okay, I gave you all the money, you did everything, you built it, they came. Are you to just assume IPO to me is insanity. Who would acquire you? Why would they acquire you?
Yeah.
Or what at that point that could drive a lot of your product. A lot of this
Mhm.
engineering that you say they want that huge budget for, what's the prioritization and are you building for them? I mean, if the company that's going to acquire you built everything on AWS and you're on GCP or you're on Azure, and you really wanted to go a different direction, it's a lot easier for them to acquire you if you're on the same stack and it's a plug and play. They're going to give you a much lower valuation. Your investors are going to get screwed by that single decision on what stack you built on.
Yeah. Yeah. And so, Christopher, like I mentioned, we're going to go back to story because I come from a performing arts background. I went to school for acting and I ran a circus for a number of years, because that's normal. Um, but so story is really something I am aware of when I'm looking at, um, I don't consider myself a pitch coach, but I sit in sometimes with Maria and listen to some people do pitches, and I've run accelerators and worked in accelerators before, so I've listened to a lot of pitches, and I always go back to you have to make a connection with these investors. You have to make a feels connection with these investors because they're just humans. And if you connect, and that's through story, people want a story. And what you were just talking about, I want to go back to as well, because that exit strategy, that plan is the end of your story. Like what's the end? You're just it's a cliffhanger. Um we'll just see what happens.
Did it live
And
happily ever after, or did they just go through and,
or everyone dies at the end of the story.
well, let's hope not, or did they
Yeah.
just get their money back and that was it because
Yeah.
built on the wrong system or something? Again,
Yeah.
did they
Yeah,
consider
just
who would buy them?
something that comes up. And so I think when you're looking at it from that perspective, what have you found that really helps startups to tell that story um, concisely? So from the starting point to the midpoint to the end of the story, when you're talking them through this, what systems, what actionable items are you giving them to help tell that story?
Yeah, I mean, for every company, it's different, and for every stage, it's different. Obviously, at the pre-seed and seed stage, you're really focusing on the team and you're focusing on the problem that you're solving, and you're trying to communicate that you have a plan. Once you start getting to the A round, you're starting with your KPIs because let's be real, and that's the hard part that I also advise people on is that once you have revenue, it's actually harder to raise because it's be real, it's less about the problem you're solving and your solution, and it's more about scaling and it's about KPIs. They're going to look at your numbers more than anything. If your numbers don't make sense or they don't match or you're BSing them, people can tell when you're BSing. I mean, good investors should be able to. I mean, so often I have found that investors don't do their diligence. I mean, even large ones, we see a lot of news out there about all this, uh, all this stuff going, as they say, if you're in Forbes under 40 and you're invested by Andreessen Horowitz, yeah, it's happened way too often.
Yeah.
So
I agree. I agree. Sometimes that list is just a
it's an
early.
indicator.
It's an indicator of something, not great
Yeah.
things, maybe.
Yeah, so I'd say it's different. If you are in a stage where you have revenue, you should lead with your revenue. And if you're not leading with your revenue, it means your revenue is not good, which means that you need to be stronger in other sections. You need to really have a story on how you're going to increase this quickly and why that revenue is not looking good. It's going to look good very soon. And it needs to make a lot of sense on why, if I give you this money, this is going to have that happy ending that you've been looking for. And again, this goes back to telling a story. I
Yeah.
think that so often the other caveat I have, though, is that I haven't been a founder myself, so I want to put myself in the founder's shoes, not just talking as an investor and talking at everybody. I want to talk with them. I often have been in incubators, accelerators. Heck, I just got back from Hong Kong and Shenzhen, and part of the program that they were doing for the other startups there, I was there advising and mentoring too, was that they brought in a storyteller. They were trying to help tell a story to founders that had 60 seconds to pitch their company. Like, what the hell kind of story are you going to tell? And you're giving this like whole, okay, you have a start, you have a finish, you have a climax. Like, no, you don't. You need to just hit them with everything immediately and get straight to the point. You can only focus on this is the problem I'm solving, and this is the team I've got the traction. You need to hit them right away. So again, it's different for everybody. I think storytelling is important, but I think that you really have to have everything be concise to the point. If you have a slide that is going through and that needs to be a commercial that really hits everybody on that slide. The next slide, another commercial, another commercial, another commercial. Everyone has to pop and be amazing because you're competing with other really amazing companies. You're competing with the whole world of investments. that investor could put their money literally anywhere. They could put it towards a yacht instead of doing an investment. Doesn't even have to be an investment. They go on a
Yeah.
vacation. There's a reason investors are on vacation so often. They have the money to do so. They should be living their happily ever after. You're that side gig that keeps them busy and, fills the rest of their time. So it
Yeah.
again needs to pop, 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 depending on how much time you've got with them.
Well, I think and even for that, I just think you potentially may have had a bad storyteller teacher because from the performance perspective, we have 30 seconds to do a monologue and get someone's attention enough for them to cast us. Like I've been in so many situations where you've got 30 seconds or less to grab someone's attention. So it's still storytelling, but it's how do you do it? How do you grab their attention? And one of the things I used to love about the accelerators that I ran is we would put founders in an elevator and say, all right, you
They
have
actually
until
did
the
that. That was
ground
what was
floor.
that was amazing. They literally built. So what the funny thing is, they built an elevator with a screen in front of them that showed ready, set, go. But then it counted down the full 60 seconds.
I love
And the
it.
first advice I gave them was, I'm like, whoever spent money on this, sorry, because everybody
I
needs to sit
mean,
in front because the investors need to see their faces and be in front of them, not looking through a screen. But yeah, it was literally, and I think that's where, like you said, maybe the person doing the storytelling, this is also where if you have a giant room, it's hard to do it. But the
yeah,
best kind of advice should be one-on-one. I want to listen to your pitch. And honestly, most of the time, I'm doing their pitch for them and redoing it for them so
yeah,
that they have that actionable advice. Have you thought of pitching it this way? How does this
yeah,
sound? Does this pop for you a little bit more and capture you? And a lot of it is energy too.
Yeah.
yeah,
Yeah. And I can also say a lot of the time, I said, for heaven's sake, you're talking about your baby, you're passionate about. I just don't want to see that you're standing there and saying, hello, my name is Maria, and we are the latest platform as a service marketplace, AI enabled for whatever.
I'm not there for a lecture.
So yeah, and I
yeah,
think that value proposition is also so yeah, it is I think so important for founders listening, and especially ones who's never done a fundraise before. Please work with people like Christopher around how to really bring that story out, because at the end of the day, investors want to I mean, the investors are not the buyers of the product, right? We're the
hmm,
investors in the company. And there's a big difference. And everyone just want to give a demo to an investor. And it's like, I want to understand whether your team understand your market first. So starting with that, the pitch is obviously very important. And let's assume that the pitch is now in a reasonable place where it's a 30-second ad to attract a conversation with
Yeah.
a investor. Because the objective is to get into the conversation and get into due diligence, right? Not have so much information in the pitch deck that it scares everyone off. Because investors will also find reasons not to have the conversation, right? But looking at the process, so now you've got a good pitch deck and you've spent the team spent the time on preparing the data room, and that could take a time as well. And now they're starting with the outreach process. And I see so many now with AI slop not doing homework around the investors, just doing a generic teasers, which is really not well thought through. What have you seen worked well when they start doing the outreach? What type of systems, whether it's a spreadsheet or anything that you put in place to help track that?
Yeah, I think it's a difficult thing, especially in today's day and age. Let's be real, investors are bombarded consistently. So many investors have full voicemails. Their LinkedIn, they never read it. They don't read all of their emails. Their inbox has 1,000 unread. I think it's how do you cut through all the noise? And obviously, warm intros are the best, but they're difficult and they're time consuming to come by. And so what I've done is I've kind of taken an approach to this where we want to do a little bit of everything. So we definitely utilize a CRM. We target making sure it's their industry, their stage. So we do create lists, but I think it's in the language. Using AI slop is one thing, but that's also bad marketing. Is that, yeah, I can create from AI and say, well, I love the university that you went to. Like, okay, again, there's clearly AI. I think you need a little more informal approach works better than most because at the end of the day, your investor needs to want to open that email to begin with. So how do we get their attention? How do we grab their attention and stand out? So let's do that. Let's do the broader outreach. It's not a spray and pray. We do know that these are investors that should be interested. Then let's move on and let's try to get more personal. Can we get their contact information? I've got systems that help look up everything from cell phones to, yeah, let's connect with them on LinkedIn. And if they'll accept it, then we can directly message them. But let's be real, that's a process. Connect, wait to accept, message, unless you want to buy a lot of in messages, that's expensive. And then from there, let's go back and let's start to look for connections. And then let's start going from there and from there and from there, from there, from there. I think that where I would push back a little bit is that you spend too much time doing too much research and too much time specializing it. That investor again could it just be wrong timing. You were the perfect
Yeah.
investment firm, it was the wrong timing. Now you also wasted your time. And for the investors to expect that, I mean, that's fine to expect it, but the reality is it's very hard to get to do that and do that at scale. Systematizing is what I personally pitch, with a combination of trying to customize as you suggested. So I think it's a little bit of both.
Yeah. And just a quick follow-up on that. So now you start doing the outreach and you have a system to help with that, right? Sending from your personal email, not some info at whatever company. How many retries do you think should be sent to an investor to see? Yeah.
I mean, it's a balance. It's CRM marketing. So yeah, you send an initial email, you have to assume that doesn't get open. So those that don't get open are read. Again, it's top of the funnel down, and your whole goal is to make sure you follow up and follow up and follow up. They may have been on vacation. They may just not be reading their emails. There's a number of reasons that your email didn't get opened, even if it was the perfect investor, the perfect messaging, everything. And so yes, don't come off as spam because the last thing you want to do, especially if you're doing it from your personal email, is get marked as spam.
Oof, yeah.
And so yeah, again, there's a balance for all of this at the end of the day, and this is why it's a job and a half, and that's why you travel to, different conferences and events and networking and everything, is that your hope is to find that right investor and that right person, to maybe even somebody else makes that intro for you. So again, just get
Yeah.
out there and network, 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 network. This is a full-time job and a half. It's not something that happens overnight. I think that my success, especially having raised a few $100 million in less than a year, apparently every company but RealKey.
Yeah.
But the whole point of what's worked there is that we got the language down for the emails, for the content, for the pitch deck. We got everything, so we got that initial conversation. And then from there, I made sure to work with the founders on their pitch to make sure that the pitch itself and the conversation, is the energy there, is the verbiage there, are they saying the right things, are they able to answer tough questions. I really poke a lot of holes. I am your worst nightmare when it comes to looking at your deck, because I am going to really come at you. And I know your company better than anybody too, because I've been going at it with you. I try to run next to the founders as a cross-functional leader. I know what holes you have. And I want to make sure you have a good answer when I have the hard question, and that your answer does not make me run for the hills. It makes me say, you know your problems, you know how to solve them, and you're going to do the right thing with my money. And then that's going to lead to diligence. And then, does your deal room look like amateur hour? Or does it again look like you have things buttoned up? And that doesn't happen overnight. There's a whole process that takes time. But do it with you. I don't just give you instructions or somebody else and then gives you a bunch of high level. I'm doing it with you along the way.
Yeah.
Yeah. And going back to that systemization, I love how you're talking about this. It's a process, it's a system, it's I think there's a reason why you've held that COO title. There's a system to this, and so when is there a platform? I don't want you to give away the special secret sauce or anything, but are there platforms that you've seen work really well, or are you kind of platform agnostic and it's really working within a company's current setup and figuring out how to use it most effectively? How do you tackle that kind of side of it and the system and process orientation?
I mean, this is more just being, I advise consult all over the board. What doesn't work is when there's no budget. There has to be some sort of a budget. I can't come in and not have access to a CRM. I can't not have access to, if I'm using, again, Google Meet free instead of using Zoom Pro, am I using, again, if I am starting with nothing and I have nothing, you're going to get nothing. I'm not
Yeah.
asking for the world. I work on budgets and I work efficiently. Otherwise, I wouldn't have business. Most of my companies are pre-seed and seed
Mm.
or A round companies. Yeah, I've got later stage companies. That's what really pays the bills at the end of the day. But I've got these other companies to fill those gaps.
Yeah.
And if you have no budget, then what am I going to do here? I can't
Yeah.
help
Yeah.
you.
And
Yeah.
and
You
I
can't
think,
build a system on air.
And
yeah.
this gets back to where you have founders that need to really look in the mirror. And again, it's not just if you build it, you have the dream that's there, but the companies that really succeed are those that started off with a proper savings to hire proper people to go through and scale. They're the first investor so that they're not just hiring amateurs to do amateur hour is what happens. You hire students, you get student level work. You hire
Yeah.
professionals that have been at this for years to decades that can go through and rinse and repeat. You're
Yeah.
going to rinse and repeat, and you're going to have that success. That's also why investors invest in people. I mean, let's be real, they also invest in Stanford grads that have never had any career and give them massive valuations based off the school they went to. But the ones that tend to be the most successful have done this before, and that's what they're investing in is saying, look, you got money from investors previously and you did something with it. We want to see you do that again.
Yeah.
Yeah.
Now, I mean, so part of the conversation is always now you have the first conversation, and obviously one of the questions that the investors will have is what's your valuation at the money you're raising, and that can be quite a little bit of a trap, and it's quite an art to figure out valuation. So what do you advise founders? And if we look again at early range, because I think once you get to A round, it's there's traction and history, so valuation is based on the record, but especially around seed, pre-seed stages, on how they should look at valuations and calculate that.
First off, I love that you're asking all the right questions, all the breadth of questions. We're not just focusing on debt, it's focusing on diligence, we're focusing on valuations. I mean, we're hitting a lot of things here. And so I think valuations, that question comes up often, especially with the earlier stage companies, or it's me going through and questioning a lot of time. They're
Yeah.
saying, this is my valuation, and me having been an investor is where'd you get that value? Oh, I got it from my parents, or I got it from this random investor. I'm like, great. Who's invested since then? Nobody. Maybe there's a reason.
Yeah.
So I think that this is where, again, like anything, if you're a builder of sort, you're a scientist. This is science. Do your research. Go through and ask around. The first thing I'm going to do if I'm an investor is I'm going to ask other people who invest in the space that know the space maybe better than me, or if I know it really well, I'm going to value it. But I think that you need to ask around because the question is that are you going to get one investment and not hear from any more investors, or you can get too many investors and you undervalued yourself, or you can get the right Goldilocks. And I think it's hard to find that Goldilocks. Let's be real, you're not going to find it. And the question is where are you? What stage are you? Do you really need the money? If you really need the money too, that's one thing. Or is the money going to accomplish so much that it's so worth it that maybe you should take a small hit right now
Yeah.
and just get it over and done with? Or again, there's different situations.
Yeah.
And I
Yeah.
think it's one of those things because I also hear so many, oh yeah, well, look at what all these others are doing. I know in fintech there was a stage where there were insane valuations and we
Yes.
would just not go in, right? Because we have no confidence that this founding team can generate the revenue multiples to get to those high valuations. And now it's the same with AI, right? There's a lot of hype, and thank heaven some of the hype cycle is coming down. And then there's the risk of having to take a down round in the next round. So and it's I think also that advice on look at your financials and build it from the ground up and do stacking models from the end goal back, because the last thing you want to see is down rounds, and I see that quite a lot from founders who go in with large raises because sometimes they get advice to say, okay, you've got to raise as much money as you can, but you still have to deploy it to drive the revenue. So how do you help them navigate that balance? And what are some of the other expertise you normally ask them to bring in that can help with that?
Yeah, so I mean, it's interesting you bring up down rounds because down rounds have become more common since, again, the rates came down and investments started drying up and investors started hiding under rocks. Then we had Trump come in and uncertainty. The only thing you can be certain of is uncertainty. I do think that investors, I would talk to the investors right now and say a lot of you guys are missing out on some great opportunities and are hiding when if you know the industry and you know the problem being solved and you know a solution and you believe in the team and everything's there, what are you doing? You're going to invest.
Yeah.
Put your money out there. Yeah, you can put it into, a high earning interest and be safe. But if you really know it and maybe you have a cheat code, maybe you have introductions that you can make because you're from that industry, definitely invest and do it. I think strategics are so valuable. But at the end of the day, down rounds come because of overvaluations. I think we saw overvaluations and hopefully we learned from it. I know that it's happened a few times, so I'm saying we learned up from it, not from the 2022, but also all the time before that. And so right now it's a matter of, okay, are investors doing their research? Are they looking at comparables? And then when you have a comparable, or just like a house, are you adjusting for a granite countertop compared to a tile one for, a pool in the back or something else? Is the founder coming from that pedigreed background and the whole team is from that pedigreed background and they have the right people lined up and is the product built and they're showing again that this is a professional scalable company. You're starting to check boxes. That's what helps increase your valuation. There's
Mm.
every piece of your pitch deck is helping increase your valuation or it's bringing it down a bit. And that's how you figure out where you're at, is that if you're not checking all the boxes, you're not checking all the boxes. So why are you asking as if you did? It's
Mm.
reality and being realistic. And that's what a good advisor consultant does,
Yeah.
is that they help you find reality and then make a decision. I'm there to advise and consult, not to make the decision. You can choose to raise at a high valuation or raise too low or raise just right. Again, you choose. I'm just going to give you the data from there.
Yeah. And I think around valuations is then what are some of the questions you advise them to ask the investors as well around valuation?
I mean, I don't ask them to ask as much about valuations because the only thing I don't want you to do is not have a valuation. If you don't have a valuation, that to me is also an indicator as an investor, as this is
Yeah.
amateur hour.
Yeah.
But we don't know. You tell us. Well, that means you haven't done your research. That means you have not put any time into this. That means you haven't spoken to investors.
Mm.
Am I the
Yeah.
first investor you're talking to? Okay. If you're looking for me to advise and consult, I'm not investing. I'm just advising, consulting at this point.
Yeah.
So,
So if you're asking them, just to follow up on that from what Maria said, if you're asking them to go and talk to investors before they don't have a valuation yet, and they're doing that kind of first foray, and you want them to talk to multiple people and see what are some of those questions that you have them start off with. Do you have them bring the pitch deck, or just talk about the product, or how do you get those conversations started a little bit?
yeah, I use my connections in the space. I definitely bring in a lot of friends that have already invested, or I've become friends with most of our investors, whether it's through RealKey or Syndio or some of the other companies that have invested. And I say, hey, can you guys take a look at this company? Yeah, they're going to pitch everything. It's most of the time I'm in the room with them. And we say, what do you think? It's always easy to ask for advice. Advice is cautious time. And now
Hmm.
if you're, who knows, maybe they say, hey, I would be willing to invest at this, or I have someone who might be interested. This is where this networking and conversations, the more conversations you have about your company, that's where you get out there and you get to who's going to help you move to the next level.
Yeah. And I mean,
Yeah.
I can tell you out of experience, sometimes when you wear that investor tag at an event, there's certain behaviors that that should be addressed. And sometimes it's like vulture hour, right? Where these startups just converge on you as if you're a prey for some vultures. And just literally just all they can do is the product, and it's not even bringing that human connection in that want you even want to have a conversation or follow up with them. So how do you advise startups around these networking events and just having a real human to human conversation versus, oh, I'm pitching you now.
No, I'm glad you brought that first circle. At first, I thought it was more of a I don't like to be approached like this way, and then you brought it back to how do we approach that? That's the
Yeah.
right thing to do. Is that end of the day, you are an investor, and you're there to meet new companies, and you're there to hopefully find a match there too. It's matchmaking at the end of the day, and I think that the difficulty here is I blame actually all of these events, the event organizers drive me nuts in this, especially in Silicon Valley, where we see more of it than anywhere else in the world, is that I am sick of agnostic events. I think that we should
Yeah.
not have agnostic events. I think that if we are having these conversations in podcasts and behind closed doors about what we don't like, why don't we talk to the event organized about what we do like. We do like to be matched. I want to, as somebody who really loves fintech, prop tech, insure tech, things in the real estate space, that's where I know I have a cheat code. If I invest in your company or I join as an advisor, I'm your cheat code. I know that I can make your company successful if I like it and I want to get involved with it, or if you're just paying me to do it. But if I'm going to an event, it's a bunch of biomedical, we're starting to get into, I do clean tech, I do, a lot of environmental technologies. If I'm going there, I want to just be in that mindset. And I want to know what stage are these companies. I don't want to go there and meet a Berkeley student or somebody from overseas that's trying to get a job. And I want, we have Luma for a reason. I love Luma in the sense that, and when that first came out compared to Eventbrite, where it can ask questions and I can approve or disapprove.
Hmm.
When I hold my events, I already have questions and it's already in the information about. Please only go through and join if you're this. And then we ask the questions and they opt in. And I do check your LinkedIn. You say you're an investor, I don't see any investment in there. I'm going to connect to you and I'm going to ask you the question. Are you really an investor? Are you actively investing? When was the last time you invested? I am I'm honestly a dick when it comes to that kind of stuff because I don't want you coming to my event
Mm.
and you are going to be the person that nobody wanted to meet that should not have been there. I want
Yeah.
every conversation to be valuable. So when you come to my events, and I've gotten this feedback, and that's why we have a high number of people that sign up to actually show up. So often you have these people host the events and they have 1,000 people signed up, 10 people show up. That's because you're not curating.
Yeah.
Curate, curate,
Yeah.
curate. But now getting to your question, sorry, there's a long-winded getting to your question, how to go through and to operate is at the end of the day, you should just be there to meet cool people and be yourself and have fun. I mean, hell, hey, where do you live? Where are you from? Don't just go, oh, you're an investor, let me go through and pitch you. You got to ease into it. There's got to be a little foreplay in there. Don't just jump straight into it. And at that point, yes, have your pitch honed in. If you already have revenue, hey, my company is at this revenue, this and that, get the investor salivating about what you're talking about and then hit them with what you do. Now, if you're a pre-seed seed, you have a problem that's there, jump straight into it. Don't go into too much of this or that, just jump into straight this or that, and we're going to hit this revenue soon. And all we need is this investment because I've got a contract ready to go. But don't assume the person's going to invest. Maybe say, is this something where do you happen to have connections or anybody? And again, just relax, calm down. Sometimes people get too energetic. Maybe they had a Red Bull before they went, sip from the fountain of youth. Again, just relax.
Yeah. Yeah. I love the fact that you're willing to take on that dick persona for an event organizer. I think not enough event organizers are willing to go there. I always I with my background, but also with our current clients, sometimes we're helping with events and things, and I'm always like, we need questions. We need we need questions. We need to I agree. I love Luma. I think that's a perfect way to be able to say approve, disapprove, answer all of these questions. I mean, I've done event registrations on Luma where I'm filling out like my very specific information and things like that. And you get approved and you feel more beholden to go and you want to go because you know they were considering that you know that they were that it wasn't just anyone in the pool. It was like you actually had to be on point with the plan, with what the event was about, with who they wanted to get there. And I think from the investor perspective, it makes them feel a lot safer and a lot more respected with their time to know that that piece is considered and that you're trying to get the right startups that they'd actually be interested into the same room as them. It's not, again, like you said, students who are like, I haven't started a company, but I'm excited to try. It's actual people who have gone through and done the work. So when you're advising the startups about from their perspective on going to these events and you say network, 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 which I love and I agree with, um, how are you asking them to curate the events they're going to? Because that's a piece of it, right?
I mean, I do want the earlier stage ones to get experience. So go to wherever you get a chance to pitch. Pitch, 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 pitch all the time. And especially I love the ones where it is a competition, where you win or you lose. If you're losing, that might be an indicator. Same thing I tell them apply to all of the incubators and accelerators to the highest ones. Don't just apply to 500 or Y Combinator or Techstars, the top three. Apply to all three. If you've gone to all three, that's an indicator. If you didn't get in any of them, that's an indicator.
Yeah.
So I think
Yeah.
it's a little bit of all of that at the end of the day. So I think that for sure where you're going to find the most success. I mean, be mindful of your time too. That's where I go to less and less and less events. I want to go to the ones that are curated. I know who is there to collect sponsor dollars, and I again I don't just blame the organizers. I blame the sponsors. Sponsors need to be more mindful where their money goes.
Yeah.
And I've
Yeah.
I know the sponsors now because I've held events, and so we talk to the sponsors, and I want them to come away from my event and say, "Damn, I got my money's worth. I want to do this again," instead of being like, "Oof, that was a waste of my time and my money, and I got nothing from this." I want everybody at that to be matched with my sponsors too.
Yeah.
I work
Yeah.
with my sponsors on their pitches.
Yeah.
So often do I hear their pitches,
That's
I'm like,
awesome.
you missed this? Like, I can tell you companies where they have something that's their differentiator and they didn't even mention it. I'm just like, oh
Yeah.
my goodness,
Uh,
can I come work for you as your head of marketing?
Yeah. No, it's that's there's so many things I think to cover now. So let's also look at I think I just want to cover two more aspects in this. So the first one is also of everyone's introductions is a good thing, to warm introductions.
Ideally.
And so many times when I get to, and yeah, there are all these outsourced companies which will give you introductions, right? For a success fee. So, and another aspect to, I think, really look at and how you work with maybe people that can give you introductions and founders and keep it transparent. But so many times I will get approached. I don't know this person from a bar of soap, and it's like, oh, you're an investor. Can you please introduce me to other investors? I'm not going to do that. I don't know who the heck you are. So, how do you work with them around how to manage introductions, how to find people that can introduce them? When's the appropriate time for this?
I mean, for me, it's the same thing. I get asked to introduce all the time, and as I say, I'm not an introducer. Big part is fundraising. I've helped fundraise. I'm not the one actually making the introductions. I'm helping them with the process and systematizing it, making sure again, pitch deck, everything is there. And that's where you're getting me where same thing. If I'm having the conversation, I'm at an event. If you've gone through my process and I know that you're a company I want to invest in, I'm going to actually be passing you along consistently. I can tell you there's a couple of companies in particular I am advising consulting for that I think are just amazing investments. If I had more money, I'd be throwing more money at it. And I think that that's something to be said. I don't think you should be paying any upfront fees to somebody because if they had that level of confidence, they should be able to go through and do it on a success-based fee. Um, I try not to be an introducer because at that point I'm being distracted from advising consulting. Um, but it's not that I don't do it. I do make those introductions when someone's gone through my process and I have confidence in them at that point. Why wouldn't I talk about them? Because it comes up conversations. Oh, who are you advising consulting for? What intrigues you the most? If I was going to put money, who should I put money in? And also, investors eventually know about my process. And at that point, they have confidence in the companies that have gone through the process. And so yeah, that's where they trust me to be essentially almost like a scout for them in that
Yeah,
sense.
yeah.
So yeah,
And that,
don't pay any up free. I would give that advice. Upfront fees makes me want to run for the hills as soon as I hear that. Um, and you're going to spend that money. They're going to do a blast outreach to an investor base that they've already burned through. Let's be real. And at that point, you're out that money, and you might not have anything to show for it other than yeah, you got the word out there, but
yeah,
that's what you want to pay for. That's what you paid for.
yeah. And also I think just to add on that, a lot of the so-called finder companies, they are not transparent about who they're connecting or what messaging they are using for you. And that can be very dangerous for your own outreach process as well. And then I think last part of it is building that, continue to build investor relationship, whether the investor invested in your company or not. There has to be consistent communication, and that's where I think a couple of companies also fall flat. So, how do you advise your founders to keep that, whether it's an investor that may be future or someone that's invested in them, to keep them updated on the progress of the company and the type of processes that they need to put in place to consistently do that?
Yeah, I mean, you've heard this through a mutual investor, and this is something that we did for RealKey, and I advise everybody to do is that we actually, just giving some direct advice, is we used a Google Drive, and that was our deal room, and we just gave access to our existing investors to the deal room. That way, we didn't have to worry about monthly updates If they want access, they would have it. If they want to schedule a meeting, they got my Calendly. I had 60 investors to deal with, and I wanted to make sure that they each got what they needed. It's all there, and they can do their own analytics. They could put it in their own format. It so often was, can you put in this? Can you put in that? No, I already gave it to you in a generic format that should be good for you. I need to go work on making the company money and traction, which makes you money. And if you want another meeting because you have questions on it, that's cool. We can set up a meeting. We can do that. As far as keeping investors updated on a consistent basis, I think that that's a difficult task, to be quite honest, because what you're doing is that you are sharing, okay, we're here, we're asking that. Now, if you're consistently growing, then at that point it sends signals to them. Oh my gosh, okay, that's the ideal, is that, hey, we were at this ARR, now we're at this, or would like to talk to you in the future, or would like to talk to you right now. That's the situation where you use a CRM, you keep sending updates to this whole base. And this is where you start off with a systematization and a CRM for the initial outreach, and you keep them updated. But that's also an indicator, is that, wait, you've been raising for how long? And you still haven't closed your round? And that's the difficulty, is it's a little bit of a double-edged sword. So it's a balance between them. And I get that all the investors want all of this. And I think it's, again, that balance where, all right, if we're interested at some point, I think investors need to do a little bit of extra work too. If this is something to do professionally, is invest, then there should be, these are the companies that I was interested in, but I didn't invest. They were on the edge of getting investment. Again, you could be the second best company they saw that investor sees. You didn't get the money. You could literally be just barely inched out by another investment, because again, they could put their money, again, it could have been that yacht just was a little bit better than you. The whole point is that an investor should have that list. The ones that are, oh my God, I don't ever want to talk to these people again. Well, investors should have a CRM. Investors should have an outreach campaign to say, hey, loved our conversation, just following up. Is your round still open? Or would love to follow up and have another conversation. I actually do get those emails. So I know investors are doing that, but I would like to see more investors personally taking this seriously. Their job is investment seriously as well.
Yeah, well, I mean, I think from investors' perspective, and that's why I say I want to move away from what investors should be doing to what founders should be doing.
Yes,
Because,
correct.
I mean,
It's a
I
balance.
can tell you many stories as well, having portfolio companies and you pinging them for updates and things, and they don't respond. So there is I think there's a balance, as you say, around those relationships, but also for founders, it's an important thing to build those relationships and trust, because it's that credibility that will open up more investors for you in the next round. And to be consistent at it, and as you say, yes, it's a bit of a double-edged sword about what you communicate or not. But there is a process to follow, and not just once an investment is made, go silent on communication. I know it can be
That's correct. I would agree.
exhausting, depending on how many people on the cap table. But yeah, I think we pretty
That's
much.
why I have to say, sorry, before we wrap up, Maria, I have to say I love the way, Christopher, that you look at it, where you're looking at it of a system of like, here's the data room, we're gonna update it this many times, and here's a link to have a meeting. But other than that, like, the the access is there, but we're not gonna do extra work
Well,
for the
the answer
investors
is,
to stay up to date.
as Maria said, there's a balance between this. What I was
Yeah.
trying to say with that, just to make sure we're crystal clear, is that it needs to be updated monthly. As long as it's updated monthly and
Yeah.
consistently,
Yeah.
then we're good. If it's not up, if that's not updated consistently, then that's where, yes, the investor trust is like, okay, we literally have nothing, or we haven't heard from you in 2 months, in 3 months. That's not okay. I literally, my LinkedIn, if you've messaged me, I've answered it. My text, I've answered it. My Calendly, we met. My
Yep.
everything, I keep up to date, and this is maybe comes from when I was the top mortgage originator. I prided myself on never ever having a full voicemail and having everything read, which is difficult. You need to start at some point. So maybe that's a good starting point for people, is make sure that you are able to respond quickly by having been caught up in the first place.
Mm.
Yeah. But that idea of just, making sure this work that you should be doing, I think personally, just based on what you just said, this update of monthly information, this cleanliness and hygiene around responsiveness, that piece should be baked in. And so it's not extra work you've done your work as a founder. That is your work as a founder.
I see what
And
Maria is
there's,
talking about, which is I've seen the monthly emails, and I get investors say, "Look at this beautiful email I got. Can you do this?" I'm like, the fact that they did that for you, kudos on them. And I get that you love that, but that if that's something I have a budget for, and so that comes back to budgeting. If I have a
yeah,
budget for that and I have an executive assistant, I have somebody that I have to do that, great. Otherwise, if you don't have the budget, which is what I'm giving advice for, is how to hack it. Growth hacking is part of what I do. This is a growth hack, is your Google
yeah,
Drive, keep it updated monthly basis, let your investors all know they have access to it.
Yeah.
And almost all my investors love it. Then I get that 10% that really wishes, which I agree with them. I would
Yeah.
love to get that too. And I'd love to make it.
yeah,
I don't have the time to make
Yeah.
that.
And I really love that idea of having it in a consistent drive that's accessible to others,
hmm
because it keeps the whole process transparent. And the other thing
yeah,
that it flags for investors is that you have structure in the way you run your business, which
yes,
is very attractive.
yes,
I think
it's
what I've
quite
also
nice too.
gotten from it is that because they're all accessing one single point of truth, they know they're all getting the same story because let's be real, there are founders who have separate deal rooms.
Ooh,
That's where it gets dangerous for investors. And that for me, it's great to know that every investor is getting the same access to the same data. That's a great
Yeah,
indicator for me. Transparency, education, going through and setting proper expectations.
yeah.
yeah,
No, and
I love
that's
it.
so key on the expectation setting. But yeah, I think we come to the end of our podcast. There's still so much more to cover, I'm sure. But yeah, I think process is important. Having doing your research is important, as you mentioned, and then having the structure in place to also have a consistent place. Your data room
Yeah.
is quite key. It's not amateur hour. You're competing with a lot of different people. I mean, it's a numbers game. You might get 250 rejections before you get a yes. So just keep on moving forward fast, and getting through the no's is also quite important. But thank you so much, Christopher. We really appreciate your time today. And if people want to get hold of you, what's the best way to connect with you? We will also post your contact information in our podcast notes.
Yeah, absolutely. And with We Fit to You right now, which is what I operate my consulting advising under, there's no website up. I'm going to be 100% honest on purpose. I work on usually referrals or people doing outreach through LinkedIn. So LinkedIn is the best way to get a hold of me. It also allows me to curate as well. So reach out on there. Happy to chat with you and see how I can help out at the end of the day. That's really what I'm here for, is to help solve problems.
Thank you
Love
for
it.
that.
Thank you so much, Christopher.
Thanks for listening to Ops or Die, the podcast for all things business operations, with your hosts, Maria Pienaar and Katie Whitcraft. Our theme music, composed by Min Tran, and editing services provided by Troubleshoot Productions. For more information on how to make your operations smart ops, visit www.scalespark.ai.